before you buy another ounce, or before you swear off silver completely, let me ask you something. If silver wasn't money, if it wasn't critical to technology, if governments didn't care about it, if industries didn't need it, would we even be having this conversation? Because right now in 2026, silver is sitting in one of the most controversial positions I've seen in years. Some people are calling it the opportunity of the decade. Others think it already ran too far, too fast. And a few are quietly accumulating without saying much at all. So is silver actually a good investment this year? Or is this where people get trapped? Let's slow this down and think like professionals for a minute. First, we need to separate two different questions that often get mixed together. One is, will silver's price go up? The other is, does silver deserve a place in your portfolio regardless of price? Those are not the same thing. For me, silver has always been more than a trade. It's an alternative asset outside the traditional financial system. When you hold physical silver, there's no counterparty risk. You don't need a bank to remain solvent. You don't need the power grid. You don't need Wi-Fi. You don't need permission. You just own it. And that matters more in 2026 than it did 5 years ago. We are entering a period where monetary policy is shifting again. There's a new Federal Reserve leadership transition happening. Whether it's Kevin Warsh or someone else stepping into that role, the tone is expected to be more flexible on rate cuts compared to the previous regime. Now here's the interesting part. Inflation never truly went back to the 2% target. It cooled, yes, but structurally price levels remain elevated. So if we enter a rate cutting cycle while inflation is still sticky, that's historically bullish for precious metals. Why? Because cutting rates in an inflationary environment weakens the currency. And when the dollar weakens, hard assets like gold and silver tend to strengthen. Add midterm elections into the mix this year. Historically, there is political incentive for accommodative financial conditions during election cycles. Liquidity flows. Markets feel supported. That liquidity doesn't just stay in equities. Some of it finds its way into metals. Now let ES talk about something that doesn't get enough attention. Silver designation as a critical mineral. For the first time, silver has been formally recognized in the US as strategically important. That's not symbolic. That signals supply chain concern. And there's increasing discussion about the possibility of government stockpiling. The United States hasn't maintained a serious silver reserve in decades. If that changes, even gradually, that's new structural demand layered onto an already tight market. And we have to talk about supply. Silver has been running in a multi-year supply deficit. For several consecutive years, more silver has been consumed than mined. And here's the catch. Silver is largely a byproduct metal. Most silver isn't mined because miners are targeting silver. It's pulled out of the ground while mining copper, gold, zinc. So even if silver demand spikes dramatically, you can't just flip a switch and double silver production. It takes years, sometimes close to a decade, to bring meaningful new mining supply online. That lag creates pressure. Now combine that with industrial demand growth. AI data centers require massive infrastructure buildouts. Wiring, connectors, high-performance circuitry. Silver is one of the most conductive metals on the planet. You don't easily substitute that. Electric vehicles, renewable energy systems, advanced battery research, all consume silver. Even small increases per unit matter when scaled globally. And then there's China. China has been aggressively securing raw materials. Export restrictions, domestic accumulation, refining dominance, they understand strategic materials. If one of the largest industrial economies in the world tightens supply flow, global availability shifts. So from a macro standpoint, silver in 2026 has multiple tailwinds, potential rate cuts, election cycle liquidity, critical mineral status, industrial demand growth, supply deficits, geopolitical material competition. That sounds extremely bullish, right? Well, let's apply some discipline. Silver is volatile, more volatile than gold. That volatility works both ways. We've already seen silver test extreme price levels this year, over $100 an ounce. And whenever price moves aggressively, it attracts both momentum buyers and emotional decisions. Some investors chase green candles, others panic during pullbacks. Silver can punish both if timing is poor. The gold to silver ratio currently sits around 65 to 1. That means it takes roughly 65 ounces of silver to equal 1 ounce of gold in value. Historically, when that ratio drops significantly, say below 50, silver has outperformed strongly. When it rises, gold tends to be leading. We recently saw silver outperform heavily when it pushed past $100. That compressed the ratio dramatically. Now it's stabilized. From a strategic standpoint, a 65 ratio is not extreme. It doesn't scream, silver is wildly undervalued. But it doesn't say, avoid silver either. It suggests balanced allocation may be reasonable. Personally, I approach it this way. Silver for upside and volatility, gold for stability and wealth preservation. Younger stackers, or those with longer time horizons, might tolerate silver's swings more comfortably. Those closer to retirement may prefer gold's steadier behavior and easier storage. And that brings up another practical point. Storage and mobility. Silver takes space. A meaningful stack is heavy. Gold compresses value into a much smaller footprint. That's not glamorous, but it's practical reality. Now let's address the price question directly. Could silver hit $150 in 2026? Absolutely possible. When you adjust prior peaks for inflation, silver has room. And once markets accept higher price regimes, psychological barriers break faster the second time. People who already bought at $100 don't panic at 110. They normalize it. That's how bull markets evolve. But could silver pull back sharply? Also, yes. If rate cuts are delayed, if inflation unexpectedly cools, if industrial demand slows, if speculative positioning gets crowded, the key is understanding your reason for owning it. If you're buying silver purely to flip it next month, you're speculating. Nothing wrong with that. Just be honest about it. If you're buying silver as insurance against currency debasement, geopolitical instability, and systemic risk, then short-term volatility matters less. And here's a mindset shift I've adopted over the years. I don't measure my wealth primarily in dollars. I measure it in ounces. Dollars fluctuate. Purchasing power shifts. Ounces remain ounces. Is silver the sleeping giant of the investment world, ready to awaken in 2026? Let's dive deep into why this precious metal might be the most underrated asset on your radar. For years, we've heard about gold, Bitcoin, and stocks, but silver often gets overlooked. That's a mistake, and here's why. Silver has a unique dual personality. It's both a monetary metal, a store of value just like gold, and a critical industrial metal. This dual demand is what makes its future so compelling. First, let's talk about money. Think about what central banks around the world have been doing. We've seen massive money printing and fluctuating interest rates. By 2026, the long-term effects of these policies could really start to bite. If inflation remains a concern, or if there's a flight to safety due to economic uncertainty, investors will rush back to tangible assets. Gold usually leads the charge, but silver, being the more affordable cousin, often follows with even greater percentage gains. It's like gold's high beta brother. When gold moves, silver tends to move faster and further. So any continuation of loose monetary policy or persistent inflation is rocket fuel for silver prices. But here's the real kicker, the part that gold doesn't have: industrial demand. This is where the story for 2026 gets incredibly exciting. The green energy revolution is not just a buzzword, it's a megatrend that is fundamentally dependent on silver. Take solar panels, for instance. Every single solar cell needs silver paste to conduct electricity. As the world pushes for more renewable energy to meet climate goals, the demand for solar panels is set to explode. Projections show a massive increase in solar installations by 2026 and beyond. More solar panels mean more silver is needed, and this isn't a small amount. The solar industry is already a huge consumer of silver, and it's only growing. Then there's the electric vehicle boom. EVs contain significantly more silver than traditional gasoline-powered cars. It's used in everything from battery connections to window defoggers and countless electronic components. With governments worldwide mandating a shift to electric vehicles, the automotive industry's appetite for silver is going to be insatiable. And it doesn't stop there. Think about 5G technology, all the new electronics, and advancements in medical devices. They all require silver due to its unmatched conductivity and antimicrobial properties. Unlike gold, which is mostly hoarded in vaults, a huge portion of the silver used in industry is consumed and never recovered. It's gone for good, which tightens supply over time. So let's connect the dots for 2026. On one hand, you have potential monetary tailwinds from inflation and economic uncertainty, pushing people towards silver as a safe haven asset. On the other hand, you have an unstoppable wave of industrial demand from green energy, EVs, and technology, which is structurally increasing consumption. This creates a potential supply-demand crunch. For years, the silver market has been in a delicate balance. But with this surge in industrial use, many analysts are predicting significant supply deficits in the coming years. When demand consistently outstrips supply, prices have only one way to go: up. Of course, no investment is without risk. Silver can be volatile, and its price is influenced by global economic health. A severe recession could temporarily dampen industrial demand. However, the long-term structural drivers are incredibly powerful. So, as we look towards 2026, silver isn't just a shiny rock. It's a critical component of our future. It's at the intersection of monetary security and technological progress. While everyone else is focused on the usual suspects, silver might just be setting up for a historic run. It's the one asset that benefits from both economic fear and economic progress. That's a powerful combination. What are your thoughts on silver's potential? Let me know in the comments below. If you found this analysis helpful, be sure to hit that like button and subscribe for more deep dives into the markets. Thanks for watching, and I'll see you in the next video.